All right, it's time. It's time to talk about something that is on everybody's mind. What is that? AI's bubble. Yes, I'm calling it. We are in an AI bubble, but I want to talk about what a bubble is and how we're going to deal with this thing. Okay. First of all, don't get caught up in the idea. Don't get caught up in the idea that a bubble is bad. A bubble, let me just like look, bubbles are incredible. Bubbles represent the biggest technology shifts our society has had over, thousands of years. We have trend following data millennia going back. And that's how we learn a lot about trend following. And we see where the bubbles exist and we see what happens. We can place where a bubble was to what happened in, the trend. And let me go back like real quick. Just let me do some history real quick. So let's talk about the tulip bubble. That's like the one everybody talks about the most. What was the bubble? The bubble actually was from overseas international cross-border transactions. These ships, we were shipping all over the world, going to get spices and goods and textiles and metals and all these different things. And so that's part of it. And then we also created the thing called the corporation. Looking back, whatever, I don't know, was it 700 years? I don't, 1400s maybe? I don't know. Looking back, you don't think that the corporation and shipping is really that big of technology until you go back and you're like, oh, they didn't have shipping. Oh, they, didn't, they couldn't do business with each other and have recourse and also protection for doing things, and like partnering together and having a way to, you know, 3, 5, 10, 20, 100 business partners to put money in and finance these different projects and know that, each person gets X share in the company. And then, that kind of creates a legal system. And so that was an innovation. That was a bubble, big bubble. And then, let's move on. You got the Industrial Revolution. That was a big bubble. But what came of it? Like we got machinery, we got manufacturing. We had, that created a big demand for metals. And what did that do? That was like, oh, let's just look at it from the United States perspective. We were all kind of centered on the East Coast of the United States, at least, the European folks. They were settled and building out the manufacturing base and all of that on the East Coast. And then there became a demand for metals. And so we started moving west in the United States to go find metals to feed the demand that manufacturing was doing. And you created, the gold rush and you created all these other things. And yes, there was a bubble. And yes, people got hurt, but a lot of people became very successful because of it. It settled the west of the United States. It brought the railroad. We know about the railroad bubbles. That's Jesse Livermore. He was like the poster boy of railroad bubble trading, right? And yes, you had railroad, that expanded from the east, the west, the north, the south, Central Pacific, Union Pacific, Southern Pacific, Northern Pacific. I don't know, West Pacific. Like they connected. Little known fact: they connected in a town just right outside where I was. The east and the west railroads connected to a little town right outside where I was born and raised. Data center drama town. And then that, turned into creating, like the West. You got California, you got Washington, you got Arizona where I live, you got all these places because of the mining. And then of course, kind of another cool thing that came of that was you didn't really have much of an opportunity if you didn't already weren't no noble or a landowner or anything like that. So you just kind of go west and, start a farm. You could kind of like change your lot in life, which was a cool benefit of a bubble. Then we get into like electricity bubble. We had like the radio bubble, TV bubble. We had automobiles bubble. We had a lot of different things that caused bubbles. And what came of that was actually something pretty cool. But let's go to history out of the war, out of there. Let's stop LARPing as a history professor, Chris. Let's focus on the dot-com bubble, because that's the one everybody's probably most like see. I see AI, it's dot-com bubble, samesies. It's a bubble. AI is a bubble, 100%. And we need that bubble. So the thing about a bubble, and I'll get to the dot-com one here in a second. The thing about a bubble is it's only bad at the very end. Like when it's happening, well, it's bad if you're not in and you're watching it, and you're seeing you're anybody who's you feel smarter and more educated, more experienced, more knowledgeable, more whatever, sitting here watching Bubble Boy over there making millions of dollars while you're over here like, it's a bubble. Well, if you got into the bubble, the dot-com bubble in 1995, well, it hurt for 4 or 5 years for you before it finally popped. Then you felt great, right? If you got in 1999 or 2000 at the top of the bubble, you might have felt great for a little bit, but it didn't feel good after that. So what what everybody's focused on is the bubble. My son, might pop in. I just want to make sure. Door's locked. You want to be timed when the bubble is still has legs, right? That's obviously you want to invest. If you were to go back in time, it was 1995. Would you rather invest in 1995, knowing what you know, go back and invest in 1995 and be like, hey, I'm a cajillionaire? Or would you rather, like knowing what you know, not go back and not do it, right? Of course you want to do it. We're going to attempt to kind of like time it. Now, the thing about the bubbles and what we're actually doing is we're going to look at the markets and we're going to analyze the game. We got to be involved. Every time I've made really, really, really good money in the market has not been from the algorithmic systematic trading. That's where like steady compounding growth comes from. That's where the foundation. That's where I need my, trend lock in there. That's where I need crisis hunter. That's where I need momentum rotation. That's where voltaic is. These are the algorithmic systematic trading things that like keep the money there and just like grow over time. This is where my kids are their college fund or whatever it's going to be called when they're older. That's where their money is. That's where when my dad's like, I don't know what we need to do, I was like, this is what you're doing. And so it's simple. Okay. I don't have to think about it. It has rules. It's rules based. If something breaks, I have rules to get out of it. That's it. Okay. What we're talking about right here is not that. We're talking about getting involved in the AI boom. Now, it could be a top signal that this is why I'm doing. Great. I'll be your signal. I mean, fine. I've been early. I've been late in the past. But whenever I've made really big, life-changing money as an investor, trader, it came from being into these like big mega booms. You have to be in the game when these things happen and you have to participate. Okay. Well, I guess you don't, like some people like, trust me, if I had enough money in my algorithmic systems, I'd probably be like not paying attention, but I don't know. I'm not there. They're doing great. They're fine. It's just like, I don't know. I'm not a billionaire. I don't know. Long ways to go. So, how I've done it in the past is be a participant, like very active in the game when it was happening. .com, I was very active in that. I came in a little bit late. It was 99 when I got it. I mean, I had a little bit of money in the market. I was still a Marine. We didn't get paid a whole lot, but I had a little bit of money in there. And then by the time I got out, I took that and, traded it up. That's how I got into trading. I got on a prop trading desk. And then then it crashed. But at that phase in my life, I actually I caught the crash. I was a doomer, like a lot of people are. When you first get into the market, you're always looking for the doom. It's like I have to get into the doom game. This has gone too far too fast. I've seen this thing before. It's short. Well, luckily for me, it worked. And unluckily for me, it worked because I kept thinking that that was the thing. And, I didn't catch the housing situation. I didn't go along the global financial crisis. I traded it. I was just a trader banging around. Yes, because I couldn't get my head around the idea of buying, real estate that was, I don't know, $300,000, $500,000 year before is now a million or something like that. I just stayed out of the game. And, a lot of people, made a lot of money and a lot of people got out of it. I did not. So eventually I got through that. But if you joined, if you were in the dot-com bubble, when you were in early, you did really well. And then the benefit of the dot-com bubble is we have an iPhone, we have Android, we have phones that are incredible. We have, like, I'm talking to you, like YouTube exists because of the internet. Everything that came from the dot-com bubble, we think about the dot-com bubble as this bad thing, but the bubble part is what created everything. So it's the investing in things that you don't know, investing in things that that you don't know if they're possible, but 20 years later, they're certainly possible, and you're just early. You're investing in things that, eventually play out. That it's the thing about bubbles is like it starts with this like demand constraint, GPUs, Nvidia right now, where it's everybody needs it, everybody has to have it. And if you don't have it, then that starts, this scarcity creates competition. And so competition, yes, there's competition to Nvidia, nothing quite as good as Nvidia yet, but because of Nvidia's margins and their, what they can do, there are companies out there that are like, well, we're going to do it. Of course, Elon is like, yep, we can't be beholden to one provider. So we got to take our shot. Google, they have the TPU. We have GPUs, graphic processing units. Google has the TPU, tensor processing unit. It's a more narrow focus. It's an ASIC. It's application specific integrated chip. So what its job is to do like exact stuff, like really like I know what this needs to do it. Whereas a GPU is like, I don't know, give it to the GPU to figure it out. That's kind of the I don't know, the cheap guy version of it. I'm happy to go on the TPU deep dive. I love it. It's one of my favorite things to do. Not right now. And so that competition brings all this new innovation. When there's like a pile of money all wanting this thing, then people start building and building and building, and people take, big shots. Cerebrus with, we used to have little memory chips or, little tiny things. They're like, let's make it huge because what does it matter? It's in a data center. And you're like, oh, actually, it's a cool innovation. Like it was just a different idea and it works. And now we have, high bandwidth memory, like bottlenecks everywhere coming, like, Micron is like print money. They're up 1,000% and they still have, price to sales ratio is still like single digit versus, somebody like, I think it was like Cloudflare is, I don't know, 120 times. I don't know, something like, but it's ripping too. It's just that there's no supply for all the demand. Now, that leads us to what we're talking about. We're going to get to, okay? We're going to get to earnings season. Did you think I was going to say that? Did you think I was going to hit my microphone? Okay. We're going to get to earnings season, and we're heading into earnings season. Right now is mid-July, and we just got the first turd in the punch bowl. The first, actually the second. The first is this little sell-off we've started to get. Here, let me share my screen. Is this little sell-off we started to get. Yeah, it looks like mid-June is when we had semis peak, but it looks like the first strike was, basically in June. Let's look at QQQ. It was about that time. Yeah, we peak at the beginning of June. So it's a month and a half into either, a pullback or consolidation in tech. Q is probably not the best way to do it because, you can look at SPY. Whoops. You look at SPY and it's almost at all-time highs. QQQ, NASDAQ is almost all-time highs, a little more sensitive. Semis, a little bit off. But it's done this huge push, and then it's kind of done this sideways consolidation. And we've seen that almost. This is one thing that's interesting. That's my portfolio. What's kind of interesting is while, yes, we've had this massive, massive run in semis since like 2023 when it all kind of happened, we've had a lot of periods of sideways. And so when you see a chart like this that goes from April 2025 at 185 to almost 700, the first thing everybody thinks about is bubble. Okay, that's a bubble. I'm not going to lie. Yes, we're looking at a bubble right here. That's a bubble, but that's not a bubble bursting. I don't think. Maybe we're gonna dig into it. So the bubble itself is not the bad guy. It's the bubble bursting and the fallout that's going to be the bad guy. And yeah, AI will be the bad guy eventually, but right now it's not. And so what I did for the last few weeks, I've been writing quite a bit. If you're on the email list, you've been reading it. If you follow me on X, uh, maybe you've been reading it. Apparently, our friends are now able to see what our other friends are doing. So maybe now you can actually see my writing. But if you go back to my X profile, Chris D Macro, or go to the blog on the website, or sign up for the email, you're going to get a lot more about. You're going to get two things. You're going to get me talking about systematic trading, algorithms, and shit posting, and two, the AI trade, and so the earnings, the learning about technology, the getting into the data centers and seeing it firsthand, and talking to people and doing work in AI and doing all this is it's an uncorrelated trade to my systematic trades, because those all are rule based, and they just go off of the statistical logic that they were created on. This is like Chris's little tiny brain trying to figure it all out. And so that's like a hedge. So if I had a portfolio of $1 million, whatever, $100,000 portfolio, like 90% of it, maybe 80% of it's in my systematic trading. 20%, let's say, maybe 30, now is in the actual thinking and seeing and planning and researching and learning and updating my models mentally, investing, the actual like physical stuff. So it's a different style. And again, the times that it's crypto was one of those times in 2017. I caught that thing. I caught the crypto trade that year, like, and who didn't? But I also got out in time. I got out at the top, and that's documented. I got that. Whatever. Believe me if you want. It was because I was so involved. First of all, I would not have had the conviction to catch, Bitcoin going from like 600 to 20,000, or Ethereum going from like 15 to 3,000 or something like that, 1,500. I forget what it was. I would not have had the conviction to take those trades had I not been knee deep in the research and understanding the vibes. Like, you can, again, say what you want about the bubble bursting. When you're in it and you're investing in it and you're making the money, it's, that's all that matters, right? As a trader and investor, your job's here to make money and to keep your money. And you don't need to own an asset that goes down, just because you feel like you need to. Like, you don't need to buy Bitcoin at 125,000 and hold it all the way to 60,000 because you think it's going to 1 million. You can, nothing against that, right? But this, I would say it would be better to own it 60,000, thinking it'll go to 1 million. than buying it at 125,000, writing it down to 50 to 60,000, and then whatever. Um, so what I'm trying to do here is I want to be involved, intensely involved with, look, I'm building an AI, I'm using the tools every day, I advise companies, I'm building products all the time, making our algorithms, like I use these products all the time. I also have a background. I got into technology in the dot-com bubble. I was stacking and racking servers in data centers at 2 in the morning over the weekend. Um, I did that for many, many years. That's how I learned networking and switching, and sysadmin and database, DBA, database administration, software development, all that, all the technology, all the stuff. Like I learned it back then when memory and bandwidth and processing compute was a bottleneck. So I like understand where all this new stuff is. I understand the constraints and how they exist. Memory, a real constraint. Storage, a real constraint. Power, a real constraint. These are not new. It's just we've been in this world where, everything was just able to be in the cloud and it all kind of worked for the last 15, 20 years, maybe, where you could kind of get away with it. But the first, like 5 or 10 years in tech was very much resource constrained. And I was very lucky to be involved in a startup where just like any startup, as if you're early, you get an opportunity to learn everything and do every job. The later you get there, the easier it is and the more strict your job titles and roles are. But when, it's all hands on deck at 2 in the morning on a Saturday, when you got to, rip 50 web servers out and, and rewire and everything like that, get it up before like 4 a.m., 5 a.m. before, they wake up on the East Coast and start using the internet again. Weird. So I have this I understand this stuff a little bit better. Okay. So, what I did is I took, now this is what you should be doing too. You should have an AI second brain. Okay. You should be using these AI tools, not the free ones. You need to pay. I mean, you don't have to. You can just like follow me and trust me if you like, and that's weird. But what I'm going to show you is like how to do it, so you don't have to, trust me. You can do this on your own. So you need to have a paid version of an AI tool or install one on your own machine, and a really powerful machine. Then you don't need one. But Hermes, Claude, or I'm sorry, Claude or ChatGPT or Grok or Gemini or Perplexity or whatever. And you need to like build out the second brain. It needs to know what you are learning, what you want to learn. I mean, you could do it with Notion. You could, like you could use your Google Docs and use Gemini inside that. But what you want to do is you want to give it all the information, give it all your thoughts, give it the context that you're thinking about, give it the stuff that you don't agree with, give it the stuff that you do agree with, give it all those things. So, think about it. You like give the, Michael Burry idea on AI and my version, the positive side. I don't know. Put them both in there. Because they're two conflicting sides to the game, right? Go get the podcasts, moonshots, get, everything from Mark Andreessen, get everything from Elon, get everything from Mark Zuckerberg, get everything from, whatever, anything Jensen throws out there. Like just get as much of this information into your AI tool. How do you do that? You can just drop a link and say, pull the relevant information out of this and, add this to your memory. And like, let's create a project here called AI second brain or something like that, AI investing brain or something, and you say, I don't know how to do it. You say, ask your AI to do it. It'll do it for you. And so if you can start organizing all your thoughts, all of your documents, all of the podcasts, all of the videos, all the emails, all the tweets, all these things that are about this subject, you can pile them in there and start to come up with your own thesis, your own ideas. And it's somebody you can ask questions to and say, you know what I want to know is, what is this? What is that? And you can do, I don't know, like what's strong? Where is something that everybody, here's a good one. Okay. So you put all your stuff in there and then you say, hey, AI friend, um, where is the AI market going? We're heading into earnings season, and let's say IBM just did this guidance, and I'm wondering, like, where are you seeing from all the podcasts and all the information, the news, and everything that's out there? Go out and scour the internet today. Tell it the date so that it knows to make sure it doesn't just use its training data. It goes out and gets fresh data. Go out and like tell me where are the bottlenecks in investing in not investing in the AI build out right now? Where are places that people are under investing or people are expecting the trade to be done, right? And you get an answer back, and then you kind of, okay, well, what companies are in that space? Okay, well, what companies are reporting this date, or what companies are in storage, what companies are in memory? Just kind of build it out. So I took it a step further, which is what you should do too. Say, great, build me a dashboard, and it'll build you a dashboard, and it'll live here on your local computer. It's called localhost, right? It'll give you localhost colon whatever port the web server's running on. You don't need to put it on the internet. You can just leave it on your own computer. You just got to make sure it's running. You go to your AI and say, hey, um, can you my web page, my AI infrastructure desk is down. Make it work again. It's that simple. Okay, so you go in, you say, okay, build me a dashboard. I want it to give me kind of like, this is my thesis. Break it down into the different parts, break it down into a way that I need to watch it, break it down into all these things. Here's my thesis. Here's my thesis. So if I go to here's my AI infrastructure desk, a technical decision surface for the AI build out, current read, primary evidence, portfolio impact, and the next question. So I got portfolio dialed up in here. It looks like the thesis is changing. Okay, so let's dig in. What are the changes? Right over here. Is strengthening memory, storage, servers, power delivery, and deployment infrastructure is strengthening. The changes, software and other technology budgets may become the funding source, meaning they're selling software stocks to buy memory, Micron, the memory, the high bandwidth memory makers, storage, SanDisk, Western Digital. I think like think of who has like storage that because the AI models need the data. The data needs to live somewhere, and they're not only are they sucking up all the data, but they're creating artificial data too. So they need storage for that data. Way memory works is okay. So you have processing, you have storage. Let's start there. You have storage. Everything starts from storage. Your hard drive is where a bunch of things are. You want to look at something that you have on your hard drive, then you need a processor to go process that task, which is go get that thing you want to look at. That processes it. The memory is how it remembers what it just opened and delivered to you. Think of this is how it was originally explained to me when I was coming up. The difference between processing and memory. Storage is where everything is. Okay. Think you are your computer is basically you are working on like a power line. Okay. You have your work truck over here. It has all your tools, has all your equipment. It has your lunch. It has everything you need. That's your storage. Okay. The job you need to do is you doing the work up here on the power line. Okay. Now, memory is what you can hold, you can take from the truck and bring it up the top of that ladder to, the top of the pole and have available to use. So it's kind of like everything on your tool belt. That's how this works. That's why memory is so important, because otherwise you have to keep using your processor to come up and down and up and down and up and down and up and down. Whereas if you have things in memory, you can just go up and let your processor do the work up here really, really fast because all the tools are right there. That's one of the best explanations I've ever heard of this whole thing. So I still use it 20 something years later. Um, so you can see memory, storage, power, servers. Servers are the thing, the GPUs. So that's the processors, right? Um, that's the devices that house the memory and the storage and power and like make it all work together. And then deployment infrastructure, right? Okay. So what's changing? Software names are getting hit because right now I can go out and say, you know what? I want my own version of trading dashboard. I don't need trading view. I'm just going to make my own, and you make it how you want it. That's kind of what this dashboard is right here, right? Email software. I decided to make my own email software because I was paying for this email provider, and I was getting 40% of what I wanted, and I was like, I just have AI build it, and it'll be 100% of what I want. Um, so why would I pay for software anymore? So that's why that's coming down quite a bit. Okay, so one thing you want to watch is the backlog must convert into revenue and margins, not merely long lead times. That's where we are right now. Okay, that's where we are heading into this earnings cycle at the very beginning of the earnings cycle. And my plan is, I've got a couple of positions I need to review, an allocation gap, some things that I have not think. So now we have okay, the next month, 2, 3, we're going to get a lot of information, right? We're going to get a lot of information about what is, because, on these earnings call, they're going to give guidance. They're going to say, demand is increasing, our revenue is increasing, but, it's going to take 2 years to deliver that. And so, okay, that's kind of been the thing for the last couple of years, right? So if that part changes, then okay, where in the stack is that changing? Is that changing in memory and storage? Is that changing in on GPUs and in the chips? Is that changing in power? Is that changing in a big one is regulatory. So we have to keep an eye on that. So that's kind of why this is happening. So, rotating towards my big theory, my big thesis is that CapEx or AI CapEx capital expenditure is the AI money is being spent on bottlenecks. So wherever there's a bottleneck is where you're going to see the stock, run. A lot of places have mostly run for the last year, 1,000% moves in a lot of big names. But there's some names that haven't had a move yet. Qualcomm's one that I'm kind of paying attention to. I don't know. It may play out. It might be, it might just be a nothing burger. Now, yesterday, I believe we got the IBM guidance, their early guidance. They came out, and this is the turd in the punch bowl that came out yesterday. Basically, they came out and said negative. Let me go to the. So, okay, this is kind of like my main dashboard. Just to give you a heads up. So I can keep track of my portfolio. I can keep track of news, things to kind of pay attention to, like why is Intel still in there? Danaher, why is it, it's outside my thesis. Why do I own it? There's some things, that are in and out of it. Google, here's there's some go verify things. So it kind of gives me a work flow for the day, what I'm doing. And you can kind of see the daily snapshots if you want. Like Cloudflare, something's changing in my thesis there, it looks like. So kind of I have all these different things to go and research. Whatever. Build yours how you want to build it. Maybe I'll open source share this one out too. But this is how I'm managing it. Now we're long in the tooth here already on this session, and we're just barely getting to this. So maybe I'll probably do a separate one just about this, but heck, if you're still here, let's go. My current take is that anything that's being spent on technology is being rerouted to AI. And that's, basically software. any software consulting, um, and the LLMs, the frontier models themselves are in trouble. Alex Karp, CEO of Palantir, kind of did this big rant. Satya Nadella from Microsoft has been writing about it. A number of CEOs have been talking about, all you're doing by using these LLMs is you're just training them to take you out. You can see Anthropic just keeps coming out with these new products. They were, big partner with Figma, and then they went out and they dropped, Claude Design, and kind of crushed Figma's stock like immediately. They did, Claude Law, and a bunch of law firms or legal software got crushed. Like they're just kind of doing this, and it's not a if, or are they going to do this? They're going to do it. Like they have to do it. That's kind of the thing. And so if you have a moat of that's data and IP, you need to get control of your data. You need to get it off of their servers. It might be too late, but don't continue and get it on your own servers. And so there's going to be a move in, moving from using ChatGPT and Anthropic and the other providers through the cloud to doing your own. And when you think about it, I think about a Fortune 500 company, for example. How much frontier AI do they really need to move the needle? And how much can be done in-house on, just fine models? When you think about the work that is done at a big company, it's oftentimes, like reviewing legal documents. It's processing payroll. It's emailing back and forth. Do you need Fable? Do you need GPT 5.6? Do you need GPT 6? Do you need the most powerful models for those sort of things? No. You need, especially because it's a repetitive task or a common task, you need a RAG system. You need, you can use TPUs on that one. You don't need to use GPUs. Like you can go all in-house. You can go cloud. You can, you could go to Google Cloud and, put your whole infrastructure in there, run your own LLMs on that, and have, SOC 2 compliance, security on all your data and everything. And it's not feeding, Anthropic or OpenAI or, whoever's models. You can just do your own. That's, I think that's probably going to be something that's going to happen in the next, in this next little era. I think that's probably happening. So software budgets may become the funding source, right? So we know memory storage servers, power systems are going to be a thing. As things happen to move on premises, like your own data center locally, used to be a thing. Used to have your own data centers in the building with you, the basement, and a lot of big buildings, a lot of the buildings that were built from 2000 to 2015, maybe even still have a data center in the basement. That was a feature that you could hook up. You could get your own rack. You get an office or a floor or whatever in the building, and then you got a drop straight down into the data center in the basement. That you had 24/7 access to, and it was on a really fat pipe, and they had their own networking management and all this. It was like a thing. And then the cloud kind of became ubiquitous, and it wasn't a feature anymore. It was expensive to operate. So a lot of these high rises and a lot of office buildings got rid of them, but I bet they come back. And I bet that kind of becomes a bit of a boom. So commercial real estate play, I think, that's a different angle to commercial real estate to consider. When if you think about a company that has like a flat campus that doesn't, they have to co-locate all their stuff in the cloud and they want to have on-prem now, I think that's actually an interesting move. So pay attention to that. Again, that's, all the constraints that you have. These massive data centers are going to be in, the smaller footprint of an office building. I think that's something to pay attention to. So let's get into what IBM, the CEO, talked about. In the last few weeks of June, we saw clients shift their quarterly CapEx spend towards servers, storage, and memory purchases to secure supply-constrained infrastructure ahead of expected price increases. So who are their clients? They just said clients. It didn't. I don't know what they mean, but again, that's what I'm saying is you're going to want a lot of these companies are going to move that stuff locally, and then the cloud providers are still going to be the hyperscalers are going to be a big beneficiary of it because all you're doing is just getting access to the data center, right? So the result missed expectations. I think it took like a 12%, 20% drop on the news. Um, so, okay, what does that do to our thesis? Only says that early identification of this rotation, more confirmation, but rotation into specifically storage. That's a new one. Storage hasn't really been a big issue. Storage is becoming an issue. Think about this. Okay, data lakes are databases, big, like all your data. Okay, like a company's data. If just the amount of software that's being built, used, and tech that's being deployed with this creates exponential size of data. Like you don't build software with like a small data. Like software isn't usable without data. And that's what it is. CRUD: create, read, update, delete software. And so that's what you do when you go to a website. You're looking at data. When you're looking at email, you're pulling data that has to live somewhere. And so data storage is a big thing. Accessing that data very quickly and keeping it available so that it's quick means not only do you need storage, now you need memory and high bandwidth memory. And so that's why I think that one's going to be a big thing, not just for companies going on-prem, but yes, the the frontier models are they're eventually it's going to be a speed thing. Like we're going to get to a point somewhere where everybody has like a GPT-6, GPT-7, or the Fable or whatever the one was that they didn't release. When where that's normal and you kind of like have a peak. I assume we've been doubling in capacity in capabilities. I think it's every 3 or 4 months. So it's more than an exponential growth per year. It's like exponential quarterly. Eventually, we're going to peak out somewhere, whether it's due to bottlenecks in infrastructure or we actually get to, where knowledge is, I guess, solved. I don't know. I don't know when that happens. But eventually, we're going to consider that there's a possibility that we're going to stop this exponential curve on capability, and it's going to kind of smooth out, and it's just going to be the most intelligent ever. Yay! And then it'll be fast access, how fast you can work, how fast you can do stuff. When you say, "Hey," we all know it. That's what made Google win in search. As back then, it was just like a really bad search thing, and it was slow. Google, the one thing that they did is they just did a search box. They didn't have anything else. So your page loaded quick and your results loaded quick. And people are like, back then, when bandwidth was an issue, that was super important. It always evolved. Like it's over and over. Same sort of thing. We're gonna get to a point where it has to be super fast, and that means high bandwidth memory. That means storage, and obviously processing and infrastructure to make that. You're going to need these data centers to do it. So all that stuff is super important. Let's see. Basically, I want to take a look at what we have on the table. So tomorrow, TSMC, Taiwan Semiconductor, one of the most important companies in the entire space, because they basically have a bottleneck they own manufacturing of the chips. So we're going to get like some real information about the chips, about because everybody uses them, right? And I mean, they're amazing. They're here in Arizona now. So we're moving from Taiwan and we're importing that. I'll tell you this is interesting. One of the like a lot of people think of Scottsdale as like the most affluent area in Arizona, and well, Paradise Valley is, but like a really nice place. They think to that, but actually, where Taiwan Semi is, out in the Glendale area, apparently I haven't confirmed it, but I've heard a lot of people talking about the quality of the schools, the restaurants, the infrastructure. It's just the police, the safety, everything. If you're familiar with Irvine in Southern California, apparently it's kind of an Irvine vibe out there. And yeah, that's Taiwan Semi. They basically said, hey, we need to get a bunch of the institutional knowledge from Taiwan into the United States because we need to get manufacturing of chips in the United States. We can't be beholden to this little island that's at threat with China. And that means that whenever China wants to, negotiate things worldwide, all they have to do is, do a war game, or just send a bunch of boats around and just like kind of like fearmonger Taiwan, right? So this gives a little bit less leverage to China, and obviously we discovered during the flu that shall not be named, that there was a big bottleneck on a lot of things, and so they're here. Um, they're the only ones that I know, I believe, can make the chips the size that they are, which but they're really important to Nvidia because I think there's only four fabs in the world: Taiwan Semi, Intel, AMD, and Samsung that can actually manufacture chips. And who can manufacture the Nvidias? That's Taiwan Semi. Um, AMD's got some cool stuff. There's a bunch of things behind all the other ones, but uh, the Nvidia chip's the most important right now, and as is everything else that Taiwan Semi does. So, what are we tracking? Uh, so as earnings come out, I'm paying attention. Now, I'm not instant reacting to this stuff. This is slow moving, relative to algorithms that can like read this and act. Maybe I'll do that someday. But this is more of a like, okay, update my thesis, figure it out, portfolio management for myself, hold on for the big move. Or is the bubble over? So that's what we're doing by following earnings, following this information, using LLMs to help us process this because there's so much information so fast, and it just impacts everything every day. We have to use those tools. So we are tracking. Let me make this a little bit bigger. We are tracking advanced node utilization. Oh, geez, I don't know what that is. It's CoWoS, advanced packaging capacity, wafers on silicone, something on silicone, custom silicon demand, and overseas fab margin dilution. Our thesis strengthens if AI demand remains capacity constrained. They'll tell us that packaging growth converts without severe margin dilution, meaning they're starting to, they're able to deliver. It weakens if CapEx rises faster than profitable demand. That means, and I don't think TSMC is not known for CapEx expenses. So that would be an interesting one. Customer concentration or overseas cost pressure return, which I don't believe we have any of that. Maybe with war, maybe there's something going on there that we might discover. But that comes out tomorrow. Okay. And so we'll have this card updated. We have IBM gave us a little bit of guidance, so we kind of already know on IBM. So that's tomorrow. And then we start, we spend the next next month, until we get to Nvidia, and then a month after that is Micron. So and those two are the big ones, right? So we'll start getting an idea. Danaher, this is, we're going to be looking at the bioprocess, pharma in China, things like that. Alphabet. This is a big one for me. I'm long Alphabet. Um, and in a big way, they're one of my core holdings. So one thing I'm really interested in is the TPU that they run. That's a I think that it has proven and it will continue to prove to be one of the most important technologies. And just it's cheaper. And as we start getting away from throwing, using these frontier models, things are going to get, like I said, things are going to be going in-house. And when you start spending on your own stuff, you start realizing, oh, yeah, I'm spending millions of dollars a year on tokens when I could, not have to do it. I could cut 10, 20% of my, CapEx on tokens by using TPUs. I could cut 10, 20% of power by running GPUs. There's a bunch of really interesting things that that a TPU can do, and it's Google. They have a lot of money. They still own like the ad space. It's still a moneymaker that crushes. And the cloud, we should see infrastructure growth in the cloud. That should be something that we're paying attention to. If the thesis that I'm talking about, we may have to wait another quarter before we see, but the thesis I'm talking about is stuff going on-prem and not trusting not trusting these labs who just want to be regulated and are just goofy. They're just being anthropic. You're just being goofy, man. Stop. Like everything you do, you just can't do anything right these days. That'll change. Somebody else will, win that title again soon. But whatever. Eventually you realize, oh, we can have the best model, have it for 2 days, have it taken away from us, and then, the government can step in, all these things. So people are, companies have to have a plan. Okay. Then we've got, gas turbines in here, Tesla. There's a interesting thing about Tesla being rolled up into SpaceX, of course. So that's kind of a thing. Robo taxis, full self-driving, AI infrastructure spend economics. They're a client to SpaceX. So, there's some things there. Fix. So HVAC, ironically, prior to getting into, the family business was HVAC. So I know quite a bit about heating and air conditioning and data centers and all this stuff. So it's kind of lucky. Hopefully we don't have to, tie my military experience into data center stuff, but my whole life seems to be converging on data centers. Data center power, Vertiv, Integris, atomic purity materials, and semiconductor yield. So the nuclear thing and semiconductor build. Cloudflare has been on a tear, all-time highs left and right. It's very high multiple. This is a pure speculative play, but they've moved heavily into the agent ecosystem. Agents account for like 5 times the amount of internet usage that versus humans. So it's really important, and they are they're security and launching agents and just a big push into the agentic space. Coinbase as well, very much into the agentic payment and use of the X402 protocol. Both of these guys are the Coinbase trade is more about the institutional knowledge of crypto, being that the okay. So when you have your AI and your agents out there doing stuff on your behalf, they do transactions. And so those transactions are like, a penny. And they may do, 1,000 a second, in 100 different places, just like, and so that's infrastructure that, blockchain does really well. That's infrastructure that the X402 payment protocols do really well. And that's stable coins do really, really well. So stablecoins ride the blockchain rails, right? And so Coinbase finds themselves in that agentic um, opportunity, and you get the crypto upside too, if and downside. So that's not trying to keep that as a smaller holding, but they're doing really good stuff. Quanta Services, Grid Transmission, Encore, Eaton, Arista, AI cluster, Ethernet networking. It's like, again, we get down to speed, processing capability, fast of all that stuff. And so, these are kind of, that's what I'm looking at as we're going into earnings season this next week. And that's going to update my AI infrastructure. We get into my thesis here, full stack AI build out, top level thesis that is becoming a physical world industrial build out, not just a model chip cycle. That's true. Compute power, cooling, and memory. This is something we're really focusing on, both of those. Permission, identity, edge control. This is like the agentic side. And, it is also this is like one of those things because you have to worry about government now that Anthropic's, I don't want to say IBM threw a turd in the punch bowl. I want to say Anthropic, I don't know, threw a turd in the punch bowl and then is trying to talk to you about religion as you're going to get punch. I don't know. They're bad. They're just like they're lecturing. In essence, what they're saying is like, AI is not something that everybody should have. Only we should be, you should trust us to be the people who, um, you know, can handle the AI, determine if regular people can get this or not. Think bioweapons, think cyber, think things like that. Um, Qualified, sure, they have a good argument, qualified. In one sense, but there's the argument that they are going for regulatory capture, which means if that means they're them and like two other people are the only people who can do this thing. So, if it gets regulated, then I think there's been like a couple of banks that, since Dodd-Frank, since the global financial crisis, there's only been there's like a couple of banks that have been started since then, which means, regulatory capture, which means there's no innovation. If there's no, if there's just a couple, the competition doesn't need to be intense. They can like dial it in and just like, slow everything down and just, rip profits instead of innovating. And, as a user, consumer, and everything like that, we want innovation. We want as many competitors out there. We want crazy stuff happening, trying things, making mistakes. Regulatory capture could be the thing that ends the bubble. It's existential to this being the early stage to the bubble. Now, I'm not going to pull up charts and I'm not going to pull out and say like this key level, that key level. I'm not doing any of that. Actually, I will pull up a chart, but to show how I'm applying my systematic side to this qualitative stuff, the quantitative with the qualitative. So again, permission, identity, edge control, regulation, and government gating. This is existential. This could be, this could be bad. And so, this is each little company. You can kind of dig in. And where's my thesis? Then we got pollinate systems layer, the business product layer, turning market IWS rule dashboard. That's just for me. Desk product architecture. This is the dashboard. So this is kind of like my work board. This is the things that I need to keep my eye on with this thesis. And then as things are, we see strengthening, we see changing. This is an explanation of that. So as we took that big thesis, I built all this, and then, I want to know when my thesis is getting stronger, and I don't know why. I want to know when it's changing, and I want to know why. And I want to know what I need to keep an eye on. So strengthening initial AI build out thesis establishes the desk map. It's just getting us stronger every day, I guess. But as we go into earnings seasons, we're going to learn if that changes. This will be like one of the big indicators of a market top. The market not topping, having topped. It'll be a lagging indicator. Another one is core filter reframes on the bottlenecks. Okay. We should continue to see cycling through of the bottleneck. Like there should be places where bottlenecks are identified, everything gets spent, everybody focuses, entrepreneurs come in, build, change, and the bottleneck gets removed, which pushes a new bottleneck because now you solve high bandwidth memory, but optical networking gets punished, or storage is now even further strained, or processing is further strained, or power grid is further strained. Like something's going to happen because new efficiencies show up in one area of that bottleneck, and that pushes new bottlenecks elsewhere, and it should be recursive. What's changing? So AI infrastructure is not only chips and power, machine traffic creates demand for identity permission. This is the agentic side I was talking about. So we got to pay attention to permission identity. Argentina allowed AIs to have personhood. So that could be, interesting. So it gives me what I need to do next. So you guys can expect if I keep doing videos and as I get my emails, this is kind of like my menu of what I'm doing. The big issue here, our watch list, is permission becomes a government and security bottleneck too. Frontier capabilities can be constrained by export controls, model access rules, cyber, biosecurity restrictions, and government missions. So we need to monitor that. That could change everything. Again, this is this government intervention has the power to be what kind of like pops the bubble. I think this administration has been really good at not being involved in that, not trying to have too much involvement, trying to step away. Anthropic kind of forced their hands. They kind of went in and said, like, we need you to regulate, you need to do this. And they begged them to do it. And then, Amazon came out with that report, and the U.S. government had no choice. But it didn't stop there. They keep doing it. Okay, they're continuing that type of thing, and they're doubling down and tripling down on it. And so maybe this administration doesn't get involved, which means we have another 2 years of the bubble. But then maybe the next administration, if it changes to back to what it was prior to this administration, which was very anti-tech and very regulatory, we could find ourselves in a period of at least 4 years of like government being just superpower, super emboldened, super powerful, getting a tremendous amount of control by regulating AI. And mostly that means putting us, the United States at least, at a disadvantage globally. So 2 years out before that happens, maybe, I don't know. Things change every single day. This administration, as much as we feel like, okay, we know what's happening now. Everything changes. Okay, guys, way too long. I know that was a long one. Thank you for sitting with me. I don't know if you don't already follow me on Twitter, do it. Like sometimes I say something good. Subscribe to the channel. I'm going to start doing a lot more. It's been a while. I went on a bit of a hiatus, and if you're here now, I will be doing a lot more of these. And sign up for the email. Love you guys, and more to come. Bye.